Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond over at the Contrarian Trader. Before we get to the charts and the stocks that we're watching, let's talk a little bit about open enrollment. We're targeting a open enrollment period of October 1st. That's when you'll be able to join the Contrarian Trader. Right now, open enrollment is closed. If you're interested in joining, enter your email address anywhere on the website. You'll be notified when we do open up the books to new members. So let's begin with the charts and the stocks that we're watching for the coming week. We had the Jackson Hole Conference, which is honestly it's like the peacock show for the central bankers to go walking around and strutting their stuff. And once again, no news came out of Jackson Hole, with the exception of the fact that they're not raising rates anytime soon. According to the central banks, there is no inflation in this economy. Yet when you take a look at our first chart here, which is a weekly chart of the tips, you could see that the tips are poised for a multi-year breakout. Now, I will concede that agriculture, let's bring up the DBA, agriculture is no doubt weak. But at any time, this is very oversold now. At any time, you could see a reversal on the agriculture names and then begin to see them rally higher. So agriculture, we are seeing inflation in this economy. Look no further than your insurance bills, whether it be your auto insurance, homeowner insurance, your rent. Are any of them going down, or are they going up relative to your wage growth? And you may be saying, Bob, what about all of the jobs that are being created? Every month they come out and they report a beautiful jobs number. Those jobs are in the service sector, waiters, bartenders, all good people, but certainly not the quality of job that you want to see in an economy that is growing organically. You want to see manufacturing. You want to see construction. We don't have that. So watch the tips. We have stagnant growth in this economy, and yet the tips are poised for a major, major breakout. What we'll be looking at: gold, the gold miners, silver, commodities across the board, oil. And I'm going to talk about many of these names on this video here. So let me try to get a sequence in order to set the stage to talk about these breakouts. Let's begin first with the US dollar. This is the bull ETF. Now the dollar, let's go to a weekly chart. Now the dollar, as we proceeded into 2017, they were predicting the dollar was going to rip through the roof because the Federal Reserve had decided they were going to raise rates. What happened? We are at the lows of the year. And I've been warning members about this breakdown. We had a bearish key reversal last week on the US dollar. We could come all the way down to 23.50, if not lower, by the end of this year on the US dollar. That's how weak this economy is. And you may be saying, Bob, how are you trading this market? Well, I believe right now is the perfect time to be building core long-term positions. We have been building core positions in the gold miners, giving ourselves exposure to platinum, and building positions in the emerging markets, which are vastly outperforming the U.S. markets this year. And I am not selling them. We are buying them on pullbacks. So the dollar looks weak, getting weaker. What do we like? The gold miners. You could buy the GDX. I own a leveraged ETF. But you can see on this weekly chart, the GDX is clearly breaking out. RSI breaking out. Stokes breaking out. All good stuff. In terms of gold, gold is very strong. This is a quarterly chart. And I'll talk more about the quarterly chart in a moment. But when you take a look at the weekly chart, you can see that last week we flashed a bullish key reversal. We are very close to the 1300 level on gold. This is the GLD. Once we close above 1300 on gold, you are going to see a huge rally in gold and the gold miners. You need to have exposure to them if and when we do close above that level. Gold on a weekly basis, we have a clear breakout on RSI, clear breakout on Stokes. Doesn't mean it's going to go straight up. Not necessarily. It could. But we're loving gold and the gold miners right now. Let's talk a bit about the quarterly chart of gold. Here you have it, folks. We closed at 1297.90. We are kissing resistance. And I think that by the end of the year, we could easily be testing the prior high, last year's high of 1377.50 on gold. If we clear it, we are heading up to the prior highs on gold, which was at 1,923.70. So for all these naysayers out there that want you to buy the cryptocurrencies, no way. At some point in time, you're going to have sector rotation out of the U.S. markets, out of the cryptocurrencies, and into gold and the gold mining names. So this is a beautiful breakout of a wedge formation, a multi-year wedge formation. We're putting in higher lows. Good stuff. Members, we'll be looking to add some gold very, very soon. USLV, silver. It hasn't been performing as well as gold, but the chart is setting up very nicely. We are poised for a breakout. We had a bullish reversal week last week on volume that was at about average, slightly below. Both lines on Stokes trading up above the 50 level. Good stuff. Very bullish on USLV. We are in the early stages of a bull run. Let's talk a little bit about oil. Oil, remember, is priced in dollars. How is the dollar performing? Poorly. So while I do not like the fact that you have a ton of oil out there floating around, there's a glut of it. The reason why you're seeing strength in oil prices is because the dollar is weak and getting weaker. So this daily chart is setting up nicely, but even more encouraging is the weekly chart of oil, which flashed a bullish reversal week the prior week. Last week, it did close lower on the week, but it's holding support. What we're looking for is a breakout of this downtrend channel, and we will be looking to buy some oil and perhaps even some XLE, which is behaving really nicely on a weekly basis. It did not close above support, which is really critical before we decide to buy it. I'm not going to buy on weakness. I'm going to buy stock that's been in a downtrend on strength, not weakness. So I think that early next week, we're going to get a pullback on the XLE because you could see this is a dead cat bounce on a daily basis. It was a good week last week, but a dead cat bounce nonetheless. How do I know that? A couple of reasons. One, topping tails on top of these candlesticks. That indicates that you had sellers moving in. They're just taking money off the table. They're selling strength too. Look at the volume declining sequentially. Reason two is look at the pullback on volume. We had a nice rally last week, but volume kept declining. So this is not institutional accumulation. This is profit taking or shorts covering, one of the two or both. Continuation breakout stocks that we're watching, STAA, it's in a triangle formation, behaving very nicely. A tight consolidation. We'll be looking to buy it on a breakout. EHTH, eHealth Inc. Now, on a daily chart, this is very, very overbought. Right? So what we're looking for here is a pullback and possibly a retest of this support level here at $20 per share, and it's intersecting with the 200-period moving average, which is now flattening out, which is good stuff. So we're overbought short term. I think we can get a pullback, and on that pullback and a successful retest of the breakout point, EHTH is in all probability a buy. You have RSI rising, Stokes rising, hooking back up once again. A nice chart. This is an OTC stock, ARTH, and I rarely speak about OTC stocks. I will speak about this one because I just simply love the chart pattern. You're having a series of higher lows get put in, a very orderly move higher here. We are breaking out in earnest on a monthly basis. This is a monthly chart, folks. The very, very high level view of the stock's performance. And it filters out all the noise of a daily chart, and for that matter, a weekly chart. So ARTH is looking good as a long trade, but this is very speculative due to the fact that it is an OTC name. The last chart we're going to discuss is Google. Google is having a very, very rough month this month, and for that matter, all summer long. It failed to break out back in July. It put in a lower high, and now we are very close to breaking down to a continuation breakdown. If we get a breakdown below 915.31, that is a confirmation breakdown on Google. The path of least resistance will have then changed from up to down. Now, last week we closed down below a key support level. Now, would I go shorting it based upon that close? No, I would not. I would look to go shorting it on the confirmation breakdown. When would I look to buy? If we rally up and through this upper band of resistance here in dotted blue, we would look to open up a long position on Google. But right now, it looks as though the bears are in control, but by no stretch of the imagination would I go shorting into an anticipated breakdown on Google. No way. I would wait for the breakdown, open up the short position, allow it to rally back, try to recapture the prior support level. It will try to. Then you'll see sellers move in all probability, and then we'll look to lean into the short on a failed recapture of support, which will have then become resistance. So that's the strategy there. So it's certainly not a short on Monday. Let's watch and see how it closes. Members, let's segue into Market Pulse Check, where we discuss the markets, how they're looking to trade this coming week, and we'll discuss our positions as well. If you're not currently a member and you want to become a member, membership is closed right now. Enter your email address anywhere on the website, and when we do open up membership, we will certainly let you know that we have open enrollment. Why do we do this? It's a niche operation. We want to be able to establish a relationship with our members. I can't do that with 2,000 members. It's way too much. It's overwhelming, and it's not adding value to you as a member. And everybody have a profitable trading week. Okay, members, let's talk about the markets. Let's begin with the VIX. The VIX closed near the lows of the week. We have both lines on Stokes now trading above the 50 level on the VIX. I think we may get a pullback and a retest of the support level here and then a reversal off of it. So I don't think that